Welcome back to Lunch of the Market. Wow, not buying yesterday was certainly a good move. Sometimes the best move is to not make a move at all. The market's plunged about 300 points at the open, and we finally decided to start making some things happen. We bought a good amount of call spreads this morning. After raising cash a couple of weeks ago, we have plenty of ammunition to go to work now that the S&P has officially corrected. That means the particular index is now down 10% from its recent highs. When that's accomplished, it's referred to as a correction. If you get another 10% down, like say China's Shanghai index, then they call it a bear market. That's when you're down 20% from the most recent highs. So the next question is, what's a call spread? It's not the amount of time between when you get a call that your mother is coming to stay with you and then you finally tell your husband. That's totally different. A call spread is when you buy one call and then you sell another one against it. This means you have to buy one call and then sell another one. We are fans of having time on our side when it comes to options, so we nearly always buy September, October, November, and even December or January. This morning the names we went ahead and pulled the trigger on are Akamai, Cisco, Toronto Dominion, and Visa. Toronto Dominion, that's the Canadian bank where the TD comes from in TD Ameritrade. This bank is terrific with $112.5 billion in cash and only $29.7 billion in debt. The bank has $130.52 a share in cash and trades with a forward P of 9.76 with a PEG of 0.99. They also now support a dividend north of 3.5%, and it got so cheap that we added stock in addition to our call spreads that we bought. Now don't get crazy and go bet the farm today. There's nothing that says this downtrend doesn't continue. But at some point, just like we finally saw take hold in fourth quarter 2009 and first quarter 2010, the fundamentals will matter again someday, just not today. As a side note, the AMAT, that's Applied Materials, had a great conference call yesterday, and there's a bull market in display, something we heard from Tessera as well. You can buy Best Buy off that thesis as well. The dividend gets bigger every day, and BBY now yields over 1%. That's not enough to jump up and down about, but being down $8 from the 52-week high is. Best Buy and Applied Materials are good ways to play the new display cycle. On the call, AMAT said that if Apple sells its even 7 million units of iPad, there will not be enough flash memory in the world to meet that demand, which means production will have to be ramped up, which means jobs, which means tax revenue, which means that governments might have to stop looking for ways to kill companies like the mining tax. Stay nimble out there and don't go crazy and spend all your cash today, but you can start picking away at the rubble. Have a great day, and we'll see you tomorrow.